Today, I want to talk about a crazy short squeeze that's happening right now in Disc Medicine Incorporated, ticker symbol IRON. Now, the more shorts that are impacted by this squeeze brings AMC and Gamestop closer to a squeeze as well, as these shorts get closer and closer to that liquidation point. Now, I also want to talk about how releasing the FTD data for AMC could apparently cause significant harm to those shorts. So stay tuned and let's make some money. And now I'll dive straight in with the Keyflation. So, if you cast your mind back to December, Disc Medicine Incorporated also performed a 10-for-1 reverse split, and in the last few days their stock price has absolutely exploded. So let's start off with this tweet from December from Drake. He said, "Iron just did a 10-for-1 reverse split today, and it's up 1,200%. And he said, "Isn't that what Adam Aaron is trying to do with AMC and with APE?" And on top of that, Iron also changed their QSIP number at the exact same time. That caused a massive increase in the stock price, up $17.15 on the day, up to $18.50 in total. And he said in addition to this, it peaked at $34 per share, which should mean it's over 2,000% in total. Now, on top of that, in the last 5 days alone, Disc Medicine Incorporated is up another 36% on top of that. The stock price is now trading around $32 per share. Over the last month, the stock is up 39.5% in total. Over the last 6 months, 73.6%. And over the last year, 103%. This stock has literally gone from pennies per share up to $32 per share. And as you can see as we zoom in, over that last week or over those last 5 days, the stock is going parabolic. This is just another sign that shows that reverse splits do indeed work and actually help turn around a company entirely. Disc Medicine Incorporated didn't just see this one-day giant rocket up and rocket back down, they've actually been steadily growing over the last year. Now, you may remember my video from Friday on why Adam Aaron is actually on our side. He could have just let AMC go bankrupt and he would have been given a kickback of over $1 billion, but he decided not to. But let's also take a look at those people that are saying Adam Aaron is against us and that Adam Aaron should be removed from AMC, and that the reverse split definitely should not go ahead. One of those perpetrators against the reverse split is Spence, and he tweeted saying, "If you're sick and tired of Adam Aaron robbing AMC and APE shareholders blind, then sign this petition." Now, we know that Adam Aaron doesn't rob shareholders blind because he's actually with us, as he could have allowed AMC to go bankrupt time and time ago. But as I said, let's take a look a little closer at who actually is against AMC and who is against the reverse split. Mark Kohrs has created this petition against the reverse split and to remove Adam Aaron as the CEO. And he's tagged some of the #1 supporters, which is Spence, Tara Bull, Gungo NYC, which is Amy, and Charles Gasparino. So basically those key perpetrators against AMC and against the reverse split are known short sellers, known shilsters, and also Charles Gasparino. What I'm basically saying is that if you're against the reverse split, you're basically supporting Charles Gasparino, you're supporting short sellers, you're basically supporting Matt kohrs and other shill accounts. And as David tweeted, he said, "Isn't Mark Kohrs a hedge fund short seller? Could he be so short on AMC and APE that he's going to lose a lot of money if AMC succeeds?" Why is Mark Kohrs joining forces with Charles Gasparino against Adam Aaron and against the reverse split? He asked why is he so desperate and why are they using a picture of apes, because obviously these accounts are not apes. Right now we have a clear split in the AMC community. We have those against the reverse split like Charles Gasparino, like Mark Kohrs, like Matt kohrs and many other shills, and we have those for the reverse split. Now, obviously, I'm not telling you which side to take. I'm asking you to do the due diligence and make up your own mind based on the information in my video and everybody else's videos. Now, you may have seen this Freedom of Information Act request that would supposedly cause significant harm to those short sellers if the FTD data was released. Guys, if you haven't already, please be sure to sign up to Moomoo, the sponsor of today's video, using the link in the description below. You can currently get up to a whopping 15 free shares, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use, it's very clear and simple. They've got tons of technical indicators and advanced charting tools. It says this is the final response to your October 5th, 2022 request for information regarding a security under the ticker APE that had 43 million FTDs on the first day of trading. The question was asking which broker traded this particular security without having located them from the transfer agent. It says that access is denied to the FTD data that is responsive to your request. It says, please be advised that I have considered the foreseeable harm standard in preparing this response. Basically, the SEC have decided that it would cause foreseeable harm if it was released which broker was causing all of these FTDs in AMC and APE. Again, it's obviously crazy that the SEC is literally supporting short sellers at this point, but it is also good to see that we are indeed right with all of our due diligence and that everything we've said is basically correct. There is obviously significant synthetic shorting happening on AMC and APE, so significant to the point where the release of that data would cause foreseeable and significant harm. And that's likely why AMC has spent the majority of February and also April so far on the regulation SHO threshold securities list. Alan tweeted saying this is the regulation SHO list activity so far in 2023. And he asks how much longer will this be allowed to go on before the SEC or Gary Gensler actually does something to protect investors, which I imagine the SEC and Gary Gensler especially won't be doing anything. And he says at some point there will be no more sham resets or using options to manipulate themselves off the regulation SHO list. At some point, forced covering by buying the shares needs to be enforced. Now, it likely won't be enforced by Gary Gensler, it also wouldn't be enforced by Hester Peirce, so I hope another SEC representative takes their places and forces this covering of these synthetic shorts. But so far we can see we're now up to 8 days again on the regulation SHO list that's likely to continue much longer through April and into May. Now I also wanted to talk about something very interesting to do with the on-balance volume for Bed Bath & Beyond. Now, on-balance volume is something I've touched on a number of times, but usually I've only spoken about AMC's on-balance volume. With AMC's on-balance volume, we can see the volume has only ever increased, basically. It shot up in January 2021, it shot up in June of 2021, and ever since then it's remained consistently high and has gradually increased. It's got to the point now where the net buying and selling pressure is 11.48 billion shares of AMC that have been bought. This obviously shows that significant synthetic shares have been created on AMC and still exist to this very day. Now I also wanted to talk about the on-balance volume for Bed Bath & Beyond because this is actually really interesting because it hasn't just increased and then plateaued, it's continually increased significantly time and time again. While the actual OBV for Bed Bath & Beyond is lower than AMC in total, reaching only 2.3 billion shares at its peak, it has continually increased time and time again, not just through 2021, but through 2022 and 2023 as well. Bed Bath & Beyond's OBV reached its peak in early 2023 back in January, spiking to the tune of 2.3 billion shares. Now, ultimately, the short sellers have won with Bed Bath & Beyond, enabling to seller box it under $1 per share to the point where Bed Bath & Beyond could not raise additional equity and has had to file for bankruptcy. With the share price so low at only 30 cents per share, they could not raise the additional cash they needed to survive and could also not turn profitable, and therefore Bed Bath & Beyond will likely be no more. Bed Bath & Beyond didn't quite have as many apes supporting it as we do with AMC and with GameStop, and therefore it seems the short sellers have claimed another victim. Now obviously this is something that is not currently happening with AMC or with GameStop, and it's not going to happen to either of those companies as well. Personally, seeing short sellers succeed in seller boxing and destroying yet another company in Bed Bath & Beyond makes me even more mad. Overall, I do hope that these short sellers get what they absolutely deserve, and I hope that all of these short sellers currently shorting AMC and GameStop do end up being liquidated during the squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!